Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. I'm speaking with John Kaiser, who's at the XPLOR conference in Montreal. What's the big action out there, John?
Jim, this year the conference feels a lot better. The people, everything, there's more vibrancy. There seems to be more people. Now, to some degree, this may be because it's in the Queen Elizabeth Hotel, where everything is closer together and cozier, rather than the sort of Soviet-style concrete bunker where it was last year, where everything seemed spread apart and people had to really walk to bump into each other. Even though the general feeling is that we are still stuck in this bear market that began in 2011. Gold here at 1,500 or so is a good thing, and while there are very few, if any, sort of retail type investors around, brokers have showed up at this conference. They're talking to companies, and the companies, the juniors that are there, are finally getting an audience from at least people with money who think that we are in the early stages of a turnaround.
Now, you had a presentation at the conference. What was that all about?
The title of my presentation was, "What Does It Take to Bring Lost Audiences Back to the Quebec Resource Juniors?" And in a sense, this was also about what does it take to bring them back in general. And I provided statistics about to what extent the 73 TSX venture resource listings that have a focus on Quebec participate in trading activity. And they track that of the rest of the company pretty much, but they're only about 5 to 6% of the traded value. And also the financing activity, they're also about 5 to 6% of everything. But Quebec does have the advantage that it has a local audience that is interested in the projects in its backyard. And the key is, how do you get the locals, the Quebecers, to take a stronger interest in the resource juniors? And the most important question for me is, how do we get millennials who are addicted to momentum type trading and cannabis stocks, Bitcoin, and whatever ETFs to take a shine to the more stretched out, longer term gambles that junior exploration plays represent? And I think we're getting to a point where millennials are going to tire of the fast-paced life and of the momentum trading, everything going quick, and they're going to start forming families, but they're still going to be addicted to being influencers and also to making money, but they're going to be more cautious, and they want to stay in charge. So I talked about how we need to have something like the Share Collective, which I've been involved with, which enable the individual to become a participant in the market as visualizing the outcome of projects, sharing it for others, taking the criticisms, tweaking it, quantifying the size of the prize. And the interesting thing is that the boomers and the retirees, we're also not that good at quantifying the size of a prize. In other words, what is a deposit worth if it's actually found and ready to go into production? And how do we price that prospect now based on this colorful geophysical map and a bunch of dots representing a gold geochemical soil anomaly? How do we convert that into a number? And I think the millennials are perfectly suited to learn very quickly about discounted cash flow model and the uncertainty ladder and become players in this space, and even force us older folks to get on with the concept of economic geology, and also stop dreaming about the good old days when we would be whispered rumors about this and this happening, and actually look at the data and be able to quantify. The key thing with millennials is they want to be being seen by everybody else and participating in markets. They don't just want to be passive passengers on a jet whose destination they cannot control or even how it gets there. And I think this technology is coming. The platform's partly built. And once it's unleashed, it's going to turn around this problem now where the millennials could have no reason to care about the junior space. And we people, the last boomer turns 55 next year. And of course, this junior resource sector, according to Canadian rules, is unsuitable for people over 55 years because they're just supposed to be stuck in negative yielding bonds or something like that. So that was what my talk was about. It was full house and well received, and hopefully we get to the next stage where the members of the Share Collective can seat themselves in the stadium and choose which of their fellows' outcome visualization is their favorite, and start feeding back what it is that they're thinking about the juniors, and helping the whole process become more of a self-promoting thing that pulls in the audience rather than the more traditional push-type marketing where you're always just pushing at people, buy this, buy that, buy this.
Sirius Resources was supposed to deliver a maiden resource estimate earlier this year. Why the delay?
Well, yes, it was. I bumped into Dominique Doucette and Louis Martin and asked them, last year I was here. You told me you've given up trying to find a high-grade structure within the Cheechoo intrusion. We're going back to the original bulk tonnage model, and we're going to have a resource estimate out, by in March, hopefully before PDAC, though we can't guarantee that. And for those, as some background, the Cheechoo project took off in early 2016 when the company, Sirius Resources, realized that maybe the reason they were getting these short, high-grade spikes within what was generally a low-grade disseminated gold system, maybe it was because there were structures, high-grade structures within the intrusion that were running east-west, and that they'd been drilling them from a sort of a northeast to southwest angle, and therefore they were kind of just obliquely hitting them. So the whole play in 2016 was, let's turn the drills in a different direction so we hit these structures dead on, and maybe we can come up with an underground, mineable, medium to high-grade resource that all we need to do is mine and ship to Eleanor mine, which at the time is owned by Goldcorp and now is owned by Newmont Goldcorp after the two companies merged. And that took the stock from 7 cents to $20.40 or so before it kind of fizzled. But that drilling did generate more high-grade intervals, but it still didn't put together a zone that hung together. So you could say, here we have 10 million tons of 5-gram gold that we can underground mine. So they went back to the bulk tonnage model, and last year the gold was still down there, so $1,150, $1,200. So that wasn't overly exciting. But they decided to delay the resource estimate for several reasons. One was they wanted to do some more infill drilling so that they have basically a 500 million ton block of rock to a 300 meter depth with a minimum 100 meter spacing density for the drill holes on which they can base their resource estimate and do different cutoff grades and provide a range of estimates at tonnages at different grades so that this can be a proper optionality play for if and when gold does take off into the $2,000 plus range that I think it is. And in a sense, it's been a good thing that they've done that because, at the $1,500 gold, we've already got a boost. But the more important reason was they said, we need to quantify these high-grade snippets that are sort of a nugget effect in this system. So they collected 5.5 tons of rock. Most of it's the tonalite, which represents 70% of the volume, and they've shipped that off in 50 to 200 kilogram batches for bulk sample testing. And these larger samples, in a way that drill core can't, will capture these nuggety occurrences. And they've only got back a couple of these samples, but the suggestion is that, it could be that the grade of this system runs in the 0.7 to 1 gram per ton, whereas the expectation this time last year was, it'll be somewhere between 0.4 and 0.6 grams per ton, hopefully at the 0.6 gram per ton end. And that would have made the thing just an optionality play that needs, $1,700 plus to be interesting. So this delay, allowing them to do this bulk sample and perhaps be able to use a higher grade for the resource estimate, that's resulting in the delay to, hopefully sometime in the first quarter of next year. But the other thing is, with this bulk sample, they did all these studies, metallurgical style studies, that you need for a PEA. Because the next step, once they have a resource estimate, is we need to quantify, well, what does it cost to mine this thing, and what is this thing worth at different gold prices? So, in a sense, they haven't wasted time. They've been quite productive when they do deliver the resource estimate. No idea what the grade will be, whether it'll be closer to 1 gram per ton or somewhere around 0.5 gram per ton, and how big the tonnage will be. At 200 million tons of 1 gram, it would be like a 6 million ounce deposit. The company just did a $1.5 million financing in which Newmont Gold Corp participated 75%. It would have taken more, but it didn't want to go over 19.9%. So if you get into those sorts of numbers, this starts to look as a serious optionality play that could be developed and produce lots of ounces. At this scale of operation, it would have to be a standalone. It would not be anything you ship to the Newmont operation at Éléonore. But the other thing that still needs to happen is the Cheechoo portion that Sirius owns 100%. That's half the intrusion. The Newmont Gold Corp and Eastmain and Azimut, they own the southern half of this intrusion, and they've been doing work too, and the momentum in that seems to have stalled, and they have some higher grade corridors in there, and in my view, it would make a lot of sense for these parties to sit down and the three partners in the South Éléonore project to say, okay, let's vend our various stakes into Sirius for equity, make Sirius the 100% owner, and of course, Newmont won't dilute too much because it owns, more than a third of the Éléonore South, and then let's let Sirius look at the entire project and do some additional work to produce an updated resource estimate after this first one, and come up with a PEA that looks at the entire project. And it's quite possible in that part by the Moni showing, where there is high grade, and that's very close to the Sirius border. That could be the sort of focus for a starter pit if there is any sort of meaningful high grade on the Azimut Eastmain side. So despite the delay, it is all for a good cause. We do have gold hanging here at $1,500. It hasn't yet ignited general market interest in the space. I think we need it to break out higher. But the President of the United States is doing his absolute best to increase the likelihood that the price of gold is going higher.
We'll have more with John Kaiser right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, whatever happened to Osisko Mining and its Windfall Gold Project in the Urban Barrie region of Quebec?
Osisko Mining and its Windfall Project is a cause of worry for some people. This pretty much got launched in 2015, 2016 when a bunch of companies got merged together, and the crew at Osisko Mining, which includes Bob Wares, they came up with this idea that this system that had a couple million ounces of high grade, but which, a PEA that had been done on it, it didn't make sense to mine at $1,300 gold. And this is because the mineralization didn't really hang together very well to make an easily mineable system. And they said, I don't think the structural controls of this system are properly understood. We think this is actually like, it's a Timmins scale system, and unfortunately it's going to take brute force drilling to sort this out and come up with a proper domain model and find the zones associated with the original windfall system, which has been around for decades. And they were able to, with brute force, raise an awful lot of money, over $200 million in the last few years. And they've done, I think, 1 million meters of drilling. They put out a resource estimate a year or so ago, which disappointed the market because it only modestly increased the old resource estimate to 2.8 million ounces at about 8 grams per ton, but it was higher quality ounces done with a more rigorous domain model. But since then, they have, outlined several more zones. They've extended the Lynx zone. They've got the Triple Lynx zone, and they've got the Underdog zone. And when you look at the sort of tonnage footprints that they've that they've drilled and published intervals for, it is quite possible that we could see an updated resource estimate go into the 6 million ounce plus range. And I think the market does want to see that sort of outcome. And right now it's a little worried. Osisko has spun out all its other assets into a separate company called O3 Mining to prepare itself for a takeout. But the question the market has, in the absence of gold rocketing to $2,000 plus, is there anybody who would want to develop Osisko Mining's windfall asset? Now, this group, Sean Rusin's group, they've done it before with the original Osisko and the Malartic mine near Val-d'Or, and so they could conceivably fund this and get it going on their own. But the hope is that this will be bought out and developed by somebody else. Now, they've done a fair amount of exploration, and when we started covering this several years ago, we came up with our own little canary for an area play for the urban berry. It was a little junior called Opus One Resources, which had a project called Fecto in the east. They initially thought it had some sort of EMS potential. More recent till sampling work has shown that there's it's a potential gold target, and it's surrounded by ground controlled by Osisko. And I've been monitoring this to see if the market is starting to believe that Osisko has been successful in rethinking the potential of the urban berry. And I have to say that in the last year or so, this Opus One canary has virtually almost died. It's been below 5 cents. And the company, in response to the market's obvious disbelief that this windfall district really is something new and big for Quebec, they've gone and shifted their attention to another project that they've optioned, and it's in the Casa Berardi break. And the Casa Berardi is famous because it emerged in sort of the last quarter of 1985 when one of Bruce McDonald's companies, Golden Knight, made a gold discovery at Casa Berardi, and there was really not that much in this Casa Berardi break at the time, and that created a huge area play. It had all the stocks that were exploring in that part of the world explode on the upside, but it's been 30 years since then, and this area, interest in it has become subdued, and this project that Opus One acquired, the Noyel, it was something that their geologist Pierre O'Dowd had worked on for another junior that held it. Then he had a concept going, but the company never finished the drilling strategy because it chased off something in some other part of the world, and the whole thing just fell by the wayside. So they have given up waiting for the area play to get excited about their Fecto project in the urban berry area, and are now putting all their attention on picking up where Pierre O'Dowd left off 6 or 7 years ago, and look at this thing as a Casa Berardi style banded iron formation hosted gold system. And the interesting thing, as I mentioned earlier, there's brokers and people here who are checking out these types of stories. I mean, the company's still at a nickel, but they are getting interest in terms of financing and getting the ball rolling. And this is how it starts. When you're in this horrible, pessimistic bear market, something starts to kindle interest, and the early birds come out of the woodwork, and they look for opportunities to relaunch. And it's amazing when you're in the absolute bear market funk, everything seems completely hopeless, and one forgets how when the whole glass turns half full, it is so much easier to attract capital for so much flimsier types of stories. And right now, the stories have to be pretty strong, and the market, the brokerage industry, which realizes the cannabis space is pretty much dying, and you'd be a fool to put any money into it. They're now looking at the gold sector, and the Quebec brokerage community has tended to be fairly supportive of companies with projects in Quebec.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, speaking of area plays, is Midland generating any buzz about its James Bay copper play?
Well, Midland and their CEO, Gino Roger, are pretty subdued this year compared to last year. There was a lot of what was last year going on escalated in the first half of this year when people really got their heads around the Mithril copper play, which came from those guys checking out a single copper showing that a government geologist had put on a map more than a decade ago, and they found all these boulders all over the place. They'd done an IP survey that suggested, wow, we have disseminated sulfides here, and since this is copper, we're looking at some sort of hydrothermal copper system. No idea what model it would be. And they managed to raise money and get everybody excited. They even got BHP to put up $6 million or so at a premium to the market. I think it was $1.75. But the first two rounds of drilling have disappointed the market. They have, yes, confirmed there is copper smoke in the third dimension, but the high grade seems to be confined to the contacts between granite dikes that have intruded a granodiorite, which itself is modestly mineralized. But where did the high grade end up? It's all, if you try to do an averaging thing, you're not going to get any sort of a bulk tonnage grade that's worth developing in this part of the world. And the James Bay area play that I thought was going to come to life once a serious deposit was discovered, it seems to be pretty much on hold. However, when I talked to Gino, he said that it isn't over yet. We have done that lake bottom sediment geochem survey, which we have not yet released, and I can let you know that it doesn't just stop at Jean-Marc Loulan's border there of the Piqua project. And they've done additional field work on their other holdings. And he says, we're just starting to sort out what this is all about. And the talk has been that this is some sort of ancient porphyry system, and the analog that people are pointing to is the Aitik deposit, which is a copper, gold, silver, moly deposit in Sweden that has been mined forever. It's relatively low grade, about 0.3% copper, which you probably want to have double that grade in this part of the world. But it is a Proterozoic aged system, and we know porphyry systems evolved in the Proterozoic, and we're not so sure that they had any chance to evolve in the Archean. And most of the James Bay is Archean, though it could still have had intrusions that were younger. And Gino told me that, we have managed to get age dates for this mineralization, but I can't tell you what it is because it is of strategic significance. So something is up. Their understanding of what's going on is changing. We saw in the last few weeks azimuth exploration come up with additional values for this boulder field that they have identified up to 5 kilometers west of the mithril border. The values came in, high grade, 6-9% copper. So whatever is going on at mithril seems to also be going on azimuth. However, Gino is willing to bet a bottle of Springbank 18 that those are all stones that rolled from his property westward onto the Piqua project. So it's going to be interesting to see if anybody takes him up on that bet to win a bottle of Springbank 18, that those stones actually were barfed up locally on the Piqua ground. And the big question is going to be, does azimuth and Soquem pretty much the same that has been identified so far on mithril, or is the center of gravity for this system off to the west? And I bumped into Darren Smith from our canary for the James Bay area play, which was 92 Resources Corp. That canary died last week when it did a 10-for-1 rollback and changed its name to Gaia Metals, but they still have the Corvette, the SCI West project. They have their own copper trend. Darren says, this is not the same as what those guys are chasing. This is probably more peripheral, but this idea that there is some sort of a porphyry system, a deeper-seated system that has been the heat engine spraying an awful lot of copper over a vast area that seems to have at least a lateral extent of at least 20 kilometers. Something's going on here. Hopefully we're sitting on top of it, whatever it is, and what we're seeing here in our Raven trend is like leakage from this system. But everybody agrees that while we do not have evidence of a world-class copper discovery yet in the James Bay area, it is still too soon to say that the potential is dead. And one of the interesting things is that if indeed either azimuth or Midland over the next 12 months do come up with a big copper discovery, that will spawn a very long-lived area play. Because when you have something like, say, Voisey's Bay, where somebody knocks a sample off an outcropping block and gets some good values, and then stakes everything around it, and then drills a discovery hole very, very quickly, then, if nobody else very quickly finds anything in the surrounding land, that means there's nothing there. But if it took Midland, more than a year to sort this out and come up with a discovery, and we see how widespread this copper is in the region that's been primarily looked at for gold, then you could get a very long-lived area play, because the market will know there is a prize with substantial size to be found, and it need not be in just this one location where it was found first, and you are going to have to spend exploration dollars, time, and smarts to sort out where similar scale deposits are waiting to be found. So it's not alive yet, but it's not dead yet either. It is still a potential Great Canadian Area play waiting for that higher grade zone with the large tonnage implications.
John, thanks a lot for the report from Montreal.
You're welcome, Jim. It's a pleasure.
I've been speaking with John Kaiser, his website, kaiserresearch.com. John will be taking a break for a little while, but his reports will return very soon. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.